Hi, fellow traders, what's happening? Well, today did not get off to a great start. I woke up too late. I got my son to school late, so my whole morning routine was thrown off. And if you remember from a couple of the classes, I talk about how important it is to stick to your routine, especially coming into the market. So if you're behind or something gets thrown off and you're rushing to try to catch up, it always ends in things not working out. So with that in mind, I made the decision that I was not going to trade the open. I was late and I kind of got caught up between say 8:45 and 9:15, but I still felt that sense of urgency. And so when that happens, it can cause you to jump in trades too early. Could cause you to anticipate things. So I just kind of waited. And I missed a couple of good trades. But hey, at the end of the day turned out really, really well. So, we'll get into that here in a second. One of the things I wanted to share with you, one of these really, really important concept that I want to get across to you. One of the greatest challenges in trading is knowing enough about how to trade so that you're confident in taking a trade, so that you're able to trade, but not too much about trading to convince yourself that you shouldn't be taking a specific trade. And what that means is you can get too much information. You can go into information overload and basically vet yourself out of taking a trade, period. You could define the trade as you could start what it is. You'll start looking for everything that's wrong, looking for everything that you feel can prevent this trade from actually working, and then not take the trade. Or you could be in a trade and sit there and convince yourself based on all of these other things you're seeing and just take the trade off too early before it even starts to work. And it's very critical, and that's why I focus on teaching just what you need to trade the strategies that I teach. A lot of this stuff, we don't talk about Bollinger Bands because I don't use them. We don't talk about stochastics because I don't use them. They're irrelevant to what I do. So I'm not going to add all of this fluff and stuff to the class because it's not important and it has no bearing on whether the strategies I trade are successful or not. And that's one of the things I started early on and realized that, hey, I don't need to learn all of this stuff. I just need to learn what I need to know in order to trade these strategies that I'm learning how to trade. And once I focused on that and just eliminated all that other noise, things began to be more consistent. That was just one of the keys to me being a little bit more consistent. So it's very, very important that you understand, what you need to know. Do you know what it takes to trade your strategies and to be a successful trader? Because there are too many people that live their trading through other people. And either they're not ready to do the work themselves or they really don't know what it takes to be successful. Because being successful is not about who you are or who you follow, but it's about what you know and what your abilities are. I was talking to somebody today after the market, and they were talking about how, and in this room we made $3,000 on this trade today, and all that. And I was like, wow, you made $3,000. He's like, oh no, The guy running the chat room, I said, well, why are you saying we? You know, you're excited because this guy made money, but not a dime of that flowed into your account. So why are you saying we? And that's the problem. We get hooked up with somebody that makes us excited, and when they do something, you know, it's like we. And but not a dime is flowing into your account. Matter of fact, you got a deficiency because money's flowing out. It's either going to this person or you're losing it to the market. So you gotta, first you have to sit down and realize what it takes, what it's really going to take to be successful. You know, I can't put it any simpler than that. You have to take time and figure out what it really takes. And that's what I'm trying to teach you. You know, no frills or anything else. I'm just trying to teach you what it's going to take for you to be successful and how to build your own business, your own trading business. Because that's the only way you're going to be able to survive in this industry. All right, so guess what? It's our 3rd anniversary. Actually, it's the 5th anniversary of Average Joe Trading, but the 3rd anniversary of the Average Joe Trading community. 3 years ago today, I sat out on my deck after I got off the phone with my other partners that I was working with previously, and right then and there, that within a couple of hours, I made a decision to start this and haven't looked back since. So it's been an enjoyable ride. You guys has been with me since the beginning. You know, it's been an adventure, and I'm looking forward to many, many more years. So yeah, I do have a special. It's probably not what a lot of you guys are expecting, but the only special that I'm running, $500 off the lifetime membership. That's the special I'm going to be running this week. It'll be up on the website, on the membership page. I'll have a link to it probably tomorrow, a direct link to it. But if you're interested, go to the membership page. The lifetime membership, you never have to pay another dime for anything, no classes. Everything I do, you get. You get one-on-one mentoring. All of that is a part of the lifetime membership. But if you have any questions, just shoot me an email. The other special that is continuing to run is Roadmap to Success. That special is 6 months. $250. You get all access to everything. Again, all memberships, you get free access to all the classes, pretty much everything that I offer. You get free access to, plus you get a mentor session a month. You get 6 hours of mentoring with this. So all of this is all inclusive. So if you have any questions, just shoot me an email. I'll be glad to answer any questions for you. And again, $500 off the lifetime membership. All right, so today, like I said earlier, I didn't trade the open. I missed a lot of good trading opportunities, and TAL was one of them. This was a stock on earnings. You see, we had a big gap down on earnings, but it was recovering. You can see it started trending up, and so I wasn't looking for a short. I kind of expected this, and what was the other stock? I can't remember now. Ooh, I got a brain freeze. EDU or something. Both of them were in the education industry, so they both kind of mirrored each other. But this was the one that I felt had the more open pockets of opportunity. And so I missed the first move, really nice opening range breakout move, and I caught the pullback and looking for the trend continuation. And this volume bar fooled me. This is what got me in. The volume came in, we pushed over the 20. I mean the 9, we pushed over the 100, and then we claimed it by making a higher high. And so I thought we were going to have some volume coming in. It was going to be, some consistent volume, driving it up to the 200. That was my target. But that's kind of what I was looking for. Now, you can see it just kind of teetered around, never did get the volume, ended up just going to lunch, and it just kept trading. And some people ask me, why didn't I take it off? Why didn't I take it off? Well, look at the trend. It was continuing the trend. It never lost support. So there was no indication that I should take this trade off. So I just held on to it. I mean, there wasn't anything else running. I wasn't going to dump this and then go chase another trade. That's just, it doesn't really make good sense. But you can see what happened here throughout the whole day. The 200 just kept screaming in. And it finally came in and hit where my target was going to be. So this stock didn't move until it got to where my target was, and then we got a little pop. I took a piece off, and I had to put it on autopilot because this is when I had to go pick my son up. And I put the stop in, and you could see I must have picked the same spot that most everybody who was in this move put their stop. Because you could see it came right down and almost hit my stop to the T and then bounced. And these are the type moves that gets people irritated and makes them think that the stock market is out to get them and it's personal and all of that. I mean, I can understand, and I used to feel that way too until I really understood how the market moved. It just so I could have put my stop under the 20 right here. I could have put it under that, but I put it just below the low of this last pullback. And basically, if a stock is gonna go stop hunting or volatility seeking, they're gonna pull it right below the previous low. They know some people are gonna start buying the cover, and then it starts another push up. But this really didn't get pushed up and didn't really make any more moves. So I'm all right with it. It just kind of stayed flat the rest of the day. But not that good of a day, but better than being red. 203.99. I'll take it. For me starting out late this morning and not really being in sync, I'll take this. Not a problem at all. All right, so I didn't get to do this last week. I just took off early Friday. I just shut it down and took off. Obviously, I struggle Friday. But you could see we had kind of an up and down week. Not the best of weeks. Even accuracy last week. I'm only tracking this for this month. That's the only time I'm tracking this, because I'm wanting to show you that your accuracy really doesn't matter. You can still make money. I'm hitting 45, 42%. I'm still green. I went back and looked at how much I made in January last year with the 5K account. I made just over $2,000. So I'm on pace. I'm pretty much on pace to match last year. And the market actually is less volatile this year than it was last year. So it tells me that I'm doing a little bit better in terms of profitability right now. So you can add 200 and however much to the day. But this is where I'm at. Now, at the end of the month, I will start the new equity curve and we'll be building on it. I just needed to get enough data points. So 4 weeks of data points should be a good start for the equity curve that we're going to be following. We're also going to be following the swing equity curve as well. And that's, the classes are going to start in February. So that's going to give you a better idea of how this is going to work. And I'll kind of explain it here in a minute when we get to that trade. But this is my big swing account. BA, you guys know I've been short this since before Christmas. And it hasn't really tested me. I haven't really been underwater. There were a couple of days where we did pop up over my entry. You can see my entry price right here, 336.66. So only 2 days did we kind of pop up over that, but it never did hold. So never really took me out. Not a whole lot of stress on this trade. It kind of stayed below the 20. And what I've been waiting on happened today. I've been saying once we lose this 320 level, the bottom's going to fall out. And I'm looking for the 52-week low. And let's see. This isn't the 52-week low. The 52-week low is 292 something. This was the first target. This was the target that I've been waiting on to hit. I said if we ever lost 320, we were going to come through 310, should hit this level, and that's exactly what we did today. It only took 2-3 weeks for this thing to roll over. But you could see there's a lot of big money guys that are underwater in this stock. And they've done all they could do to hold it up. I mean, you could see it. If you watch this stock and watch the price action, you could see what was happening. So if you want to see the entry on this, this is on the website. All the other trades I had on Boeing, I've been shorting this for a minute through a couple of trades. So you'll see the entry on the website, and I'll update it tomorrow once this fully posts. And you'll see the entry and where I took profit today. But I want to go back to this real quick. And I meant to point this out to you. We were watching the price action around here. And I was telling you guys, watch what happens here. Watch what happens when the 20 hits this level that the stock has been running into here for the last hour or two. Watch what happens. Either we're going to hit some big time selling volume or we're going to get a pop. And it just depended on how many people were sitting here. Were there buyers sitting here? And when the 200 finally hit, we saw some people pop. And that's exactly what we got. They were just kind of holding this, thinking that once you got to the 200, you might get some sellers to come in and help these guys who've been short. Because I'm sure that there were still people short thinking this thing was going to roll over. And they've been holding it all day, probably holding it down. We don't know for sure unless you're sitting there with these guys trading. All we can do is speculate based on what we see. And that's basically what I was doing. But it was real interesting to watch this unfold. And this is where screen time, really comes into play. Is watching these things unfold. But I forgot to point that out when we were talking. All right, so from our swing trade watch list yesterday or Sunday, OC triggered an entry, kind of made a decent move. We're looking for it to run up through 52-week high and beyond. So if you guys caught that entry, you had a halfway decent day. We did sell off going into the close, but it still held half its gains. PEP, this is the other one that we're looking at, 52-week high break. This one opened right on the 52-week high, just like we were looking at Sunday. And this triggered an entry. Now this one is not buy it if it opens above the previous high. A 52-week high, you want it to come back and test this level. And that's exactly what it did. And it pushed off of that, gave you about a point, a little over a point. So that one's working pretty good. The Yeti, this one did not trigger like we wanted it to, but you could have been a little aggressive and bought this. Normally we look for this to open higher than the previous day's close. The higher than the previous day's close. This didn't, but it showed tremendous strength and made a nice move up. Now we did lose about 1.5 points coming back into the close. Be interesting to see what it does tomorrow. And we got some resistance right here that it's sitting on right now. So, we'll see. But this did almost make it to the 52-week high. So I'm thinking this still has some work that it could be done. So we saw some pretty decent moves on Yeti. The one that I want to talk to you guys about, BYND. This one was not on our swing watch list, but this morning it was making a good move. It was gapping up. It was on our scanner, and I said then, this looks like a really good either all-day hold or swing trade, because we looked at this when I was trying to bring everything up before we walked out of the house with my son. Was looking at this, and I laid out the plan to get in, and first target would be 120.50. This 120.50's up here, and if it held us today, hold the rest, we can swing the rest, because everybody's looking for around 140 on this. Everybody's looking, and you can see this thing ripped today. It really, really ripped. But you can see, let me see, this is the 5 minutes, the 60-minute chart. We don't watch these on a 5-minute chart. If it's an all-day hold, we watch it on an hourly chart. If you watch the 5-minute chart, it's going to chop you out. Just like if you watch the 5-minute chart and you swing trading, it's probably going to chop you out. The movement in the stock is going to create that emotion. You're going to think the stock's pulling in, it's coming back, you're going to lose it, and then you end up getting out the trade before it really makes a good move. But you can see we had, if this thing made it all the way to 133 at the close, we have an order in at 133 for the rest. Now, this is a swing account. We don't have over 25 grand in this, so we can't day trade it. We get 3-day trades in a 5-day period. You want to save the day trades in case you have to get out, or if you run into a scenario like this today, where you have a stock that typically makes good, really solid moves. And this one did. Really surprising. I was expecting no more than 125 at the most today, but you can see this thing ran all the way up, and it's around 131 now. It's possible. This thing doesn't close until like 8 or 9 o'clock tonight. So this is good and for the extended hours until the close. So, we'll see. If not, this will be continuing on tomorrow, and we'll be looking for 140. But these are the kind of things that we're going to talk about in this class coming up in February. How we're going to manage this account and try to grow it so that it can turn into a day trade account where you don't have to worry about losing day trades. If you get a big all-day hold potential for a stock that has an ATR of like $7, $8, $9, then hey, this is perfect, and you don't have to worry about it. But just some more stuff that we're going to be talking about coming up here in February with the new swing class. And it kind of talked more about the TD Ameritrade, because this is the account we're moving to. One thing I found out, and the reason why we pulled out of F1, is they don't have a bank that'll even work with them. The only way you could deposit is, and I don't know if they've changed it where you can only pull money out, is using Coinbase. You have to open up a Coinbase account, and which was a crypto place, and that's the only way you can deposit with them. So there's no way we're gonna deal with that. So going, if you don't want to go overseas anymore, you can open up a TD Ameritrade account. You don't have to put in as much money as you would with these other brokers, and you can swing trade and swing your way into a fully funded account. So that's what we're going to be looking at, in addition to taking some really solid day trades, like we've done. We've done BYND back here. We did RAD when it made the big run, one big day trade. So, that possibility is there. And again, that's what we're going to be looking at moving forward. So that's going to do it for us today. I know it was long, had a lot to catch up to, but we'll try to stay on track the rest of the week. And I will catch you guys in the morning.